What is up, everybody? Guy Costin, founder, CEO of Dakota, and I wanted to talk to you about a new Rainmaker podcast, and it's going to be interviewing heads of sales, heads of distribution, asking them all sorts of questions around how they run their sales organization, really digging into their sales processes, how they've set it up, philosophically, how they've literally built the business. So you can hear, as a salesperson, our audience can hear how the best people in the business are running their sales organization. So if you have an interest in being interviewed, or if you want to recommend someone at your company to be on the show, simply email me at guy@dakotalive.com. And if you just want to register on our website where you can sign up to get alerts when we release the newest episodes, simply go to dakota.com and we'll send you emails every time we release a new interview. Welcome to Dakota Studios, the premier location for all of your video production needs. Our studio is located in the heart of Center City, making it easily accessible for companies of all sizes. Our professional production team is dedicated to creating high-quality videos that showcase your products and services in the best possible light. We understand the importance of video in today's digital age and are here to help you take your business to the next level. Whether you need a video for your website, social media, or to showcase at an event, we have the expertise and equipment to bring your vision to life. Don't miss out on the opportunity to showcase your brand and products in a dynamic and engaging way. Contact us today to schedule a tour of our studio and discuss your next project. We can't wait to work with you and help you take your business to the next level. What is up, everybody? It's Guy Costin, founder, CEO of Dakota. Welcome to the Emerging Manager Growth Show, episode 23. I'm joined by my colleague, Tim Dolan. Tim, welcome.
Thank you.
As you all know, we do this show to help emerging managers do more with less. So tips and tricks. Today, we're going to be talking RIAs as it relates to how to attack RIAs as an emerging manager. We're going to be loaded up with tips and tricks, but just to kick it off, number one, for those of you who don't know Dakota, we've been a third-party marketer since 2006. We've raised over $25 billion, mostly long-only managers, some alts, but we're really heavy in mutual funds, separate accounts. We know the RA channel cold, family offices, banks, BDs, consultants. We know the whole gamut. We have an extreme focus and expertise within the RA channel. So we're going to give you real-life advice, if you will, and counsel because we do represent emerging managers. In fact, we're out with one right now, a private credit strategy. So my point is we walk the talk. So Tim, let's just kind of kick it off. In addition, I did leave out the fact that we raised over $25 billion in 2019. We commercialized our database to compete with the likes of Preqin and others. And we now have almost 1,100 investment firms, 4,500 fundraisers using our database to do cold outreach. So 2 businesses. So with that, Tim, let's just talk a little bit about what you're seeing in the market today. Obviously, I hear from the investment sales team all the time, the success that we're having, money's in motion, we're raising money. Let's just kick it off, because sometimes I think people think it's hard out there, nothing's really happening, but with a sustained attack, it tends to work.
Absolutely, and obviously we're here just after Labor Day weekend, right? So heavy focus on fall, winter travel, right? The summer's a little quieter, but I think what's just interesting, and to your point about doing more with less, right? Efficiency tools, and focusing on what matters most, but also for emerging managers, the RA space is ripe, right, to get meetings, to get allocations. And the reason being is RIAs at the end of the day, right, need to market themselves, and their product that they market, one of them is their investment strategy. So they need unique ideas for their portfolios to attract and retain their clients. So that's why we love the RIAs. They love emerging managers. They love unique, differentiated product that you all have. And so That's kind of my main
Yeah,
takeaway.
and they do depend upon salespeople for investment ideas,
Absolutely.
right, in a very, very big way. So in general, COVID was tough because there wasn't as much travel. The RAs were then limited, but that's how they end up seeing a lot of their ideas, people doing cold outreach.
Yeah.
So anything that you're seeing kind of from a macro perspective that you want to share? Because we're obviously seeing good money in motion.
Yeah.
People are allocating to equities as much as they've been allocating to privates. We are seeing allocations to equities.
Yeah.
Any thoughts there?
No, I think also, right, just kind of a high level, as we always talk about, money is in motion. There are searches being had across all channels looking for interesting, unique ideas. What I would say is private equity, private credit, venture is definitely a very topical conversation right now. I think these pools of capital is kind of one of those on our end. It's why wait, just make those phone calls and just start the conversation, hit the ground running here in the fall.
Yeah, great. So let's kick it into RIAs, Tim. It's obviously a market that has grown tremendously, continues to grow. It should be, I believe, a focal point of everybody. Even if you just dip your toe, you should absolutely be in the RIA channel. Now, as we know, one thing is RIAs do have discretion. They still have to go through investment committee. They still have to do a write-up, but they do have discretion. You don't need to be approved. And when we speak of RIAs, we're generally speaking about Schwab, Fidelity, and Pershing RIAs, less so kind of the duly registered RIAs. But those two, you end up seeing the RIAs that custody Schwab and Fidelity tend to be larger and have a propensity to invest in alts. Our database, Dakota Marketplace, has over 2,500 RIAs from Schwab and Fidelity, and then another 12,000 RIAs that are duly registered, so about 14,000 RIAs in the database, but you are able to slice and dice it based upon the broker-dealer, whether they custody the assets. So give us a sense of timing in terms of how long it takes to raise capital with an RIA channel.
Yeah, this is one of the reasons why we love the RIA space. And as you said, they have discretion. And what that ultimately means is they have the ability to put money to work fast, but also they can put money to work with a new manager, right? So there's a lot of end channels, whether institutional or in the bank and BD space, it's 500 million or 3 to 5 year track record, right? Certain thresholds that they have to meet. RIAs, for the most part, right, they can look at new and small. So calling on those early adopters, which we'll cover a few of those here in this segment, right? That's why we love the RIA space. And then the other thing is we get asked, well, I don't have 100 million or I don't have a 2-year track record. Again, to reinforce, time goes by, so you will have that track record and you will grow, right? So whether or not to start that conversation now, and ultimately we talk about it with our partners from our business plan and sales plan. It's really 1 to 2 RAs a year for the first couple, 2 to 3 years. And that can really snowball your business, right? Yeah. Get you to 100, 200 million, and then it's the consultants and institutions, right? So our foundation, early money, start with the RAs.
And be consistent, right?
Exactly.
That's really the key, is consistently reaching out, setting up meetings, city scheduling, getting in front of as many as you can. We strongly recommend that you always have 5 cities you're scheduling for. We'll get that into the tips and tricks section, but in order to penetrate the RAs, you do have to put out a lot of asks on a daily basis, and you just have to make it part of your routine, as we'll talk about.
Yeah. One other question that we get asked about, not only just about how long it takes or the size, but also the size of the RIA, right? It's a billion or above. Let's focus on those, right? Which I never really understood that. We don't judge by size, right? So the $200 million RIA is just as great as a client as a $2 billion RIA, right? And one of the main reasons why we love the smaller RIAs, especially we all see it every single day, is the M&A activity within the RIA space. I mean, it's mind-numbing how many MAIs and the EPs and the Cerities, they're just gobbling up these smaller RIAs. And why we love it when that happens, for the most part, is if you get in with the small RIA, they love you, they love your strategy, and if they get acquired by a $30 billion RIA, you're now approved at a $30 billion RIA. Right. Doesn't necessarily mean assets are going to come immediately from that, but now you have a much larger relationship. So again, calling on the RIAs, the city scheduling allows you to chunk down the large universe and just focus on them in a certain metro area, but then don't judge by size, is to summarize, because they're all great clients. The other things, just thinking about a little bit of nuance within the RIAs for your strategy on the traditional side, it's largely SMA mutual fund. We do see a little bit of UMA model delivery. That would be with the likes of like an InvestNet on the traditional long-only side. And then ETFs, of course, we have all the 13F information within Marketplace. So you can see if you are marketing an ETF, where they have exposure. And then absolutely on the alternative side, interval funds, liquid alts, tender offer funds, even longer lockup LPs. That's a smaller subset of RIAs. There's probably about maybe close to 500 that can do some more lockup business on the alt side. And then keep in mind on the alt side, really some bigger platforms like a Case and iCapital that provides more scale for some smaller RIAs to access some alternative strategies. And then as Guy touched on, the large subset of the RIAs that we're talking about that aren't duly registered, having your strategy at a Schwab and a Fidelity or Pershing, those are the three big custodial platforms.
But then there's also, you have Wells Fargo, and you have LPL, RBC, Raymond James, PNC, where you have an enormous amount of financial advisors / RAs that a lot of people count. Is that? But then you do need to be on that platform, have a selling agreement, preferably be on a select list or in a model.
Yeah. And just a few names to call out, as I touched on the RIA aggregator side of things, that a lot of these firms are scooping up and merging with some smaller firms, but definitely be hitting. There's multiple ways to attack these from a home office standpoint, right? Trying to get approved, but then also the underlying teams or RAs that they've merged with. But you have the likes of a Dynasty, Focus Financials becoming more and more interesting with how they're creating different regional heads. Kovitz in Chicago is one of those regional heads from a research standpoint. Hightower Advisors, Sanctuary Advisors, Rockefeller, and Cerity. Obviously, we see these names in the news. It almost feels like every single day. And then lastly, as I talked about, some of these RAs that are more early adopters, right? That'll look at a strategy with a little less track record or smaller in size. A few to call out: Ballantine in Atlanta, Ballantine in Boston, William Blair out of Chicago, Corio Wealth out of Baltimore, Crescent Wealth, definitely growing through their acquisitions. They're looking for interesting emerging managers. GEM and MFO out of Detroit, Pitcairn here locally in Philadelphia, and lastly, Columbia Pacific. Just a few examples of some early adopters in the RA space that you could potentially call on.
Yep. So within our database, we have a lot of this detail around the RAs. Hopefully we've demystified some of this, right? The goal is to be city scheduling. So we're going to start off, just want to talk about some of the tips and tricks that don't cost you anything. It just requires effort. So first off, Tim, we have a discipline of city scheduling against RAs. And what I mean by that is you pick 5 cities and you're booking 9, 11, 1, 3, and 4:30. Going into your database, seeing all the potential RAs there, sending a very simple email with a meeting request subject line, date and time, pack one very powerful sentence of who you are and what you do, followed by a clear call to action. Can you meet September 5th at 3 p.m.? So keep it clean, keep it simple. That worked. You just have to have the discipline to do 20 a day. In our opinion, city scheduling drives the entire business of penetrating the RA channel. You don't know who's going to like you, so you really have to be out setting up meetings on a very consistent basis. Just that's the discipline. I've seen the firms that do it, and the firms that do it right are the ones that are consistent with their outreach. Yes, it's going to get depressing that no one returns your email, right? I get it. But that doesn't mean that you shouldn't be doing it and that it's not working. But you have to keep the email simple. We'll follow up with basically an email template that shows you exactly how to write the perfect email that gets results that we use every single day. So Tim, let's just talk about another tip and trick that we think is table stakes, the quarterly webinar. Give me just a little scout on why you know how much we like the quarterly webinar.
So we mandate this with all of our partners. It started as a call 2 to 3 weeks after quarter end, and it's just a recap of who you are, what you do very quick, and then what took place in the quarter, your performance, and then outlook going forward. So now, fortunately, we have the studio. We have our managers that come down and do it on video. If you can do it on video, we highly recommend that. The feedback that we've gotten from our one manager, Edgewood, it's through the roof. That our clients and our
you don't have to do video, right?
You don't have to. You can just do a call.
the commitment to the quarterly call as an emerging manager, because you're generally going to have one product,
Yep.
is that, listen, if you're a larger firm, which you have a lot of subscribers that are larger firms, it's difficult, because if you have 30 strategies, 30 quarterly calls, it's probably not realistic, but they have brand. You don't have brand, and so you need to build awareness for who you are and what you do. And one way that you do that is you send the 4 emails, the save the date, the invitation, the follow-up invitation, the day of. We will follow up with how to do a quarterly call. I can't tell you how important this is. And if you got nothing out of this whole little show that we do here just to inform, it's please do a quarterly call. And then what ends up happening is you do the call, you send out the replay, you transcribe it, you send it the transcription, then you do an abstract of the transcription, just like here are the key points that were hit during the call. And you can put that information on your website as well as use it in your marketing emails.
Yeah. To your point at the top of the call, this is all about doing more with less. This is one of the best efficiency tools, not only from a sales and marketing, client service standpoint, bar none, but your portfolio manager, right? Once you start to grow and you go from 5, 10 clients, doing 10 quarterly update calls might not be the best use of time. Right. This allows you to maybe go from doing 10 to down to 7 or 6. So the portfolio manager, right, can cover a lot of those client update calls on one quarterly webinar. And then, so it's client service. To Guy's point, it's also free marketing.
Yeah,
right.
And it allows you to flex your muscles on who you are and what you do and your strengths. And you always highlight a stock or property or whatever it might be to show the efficacy of your investment process, to show it live. And you can go through that. And it develops confidence, it develops an awareness and a better understanding of your investment strategy. What at the end of the day, creating familiarity of any investment strategy is the ultimate goal of a fundraiser, creating familiarity. So I'm going to pop in, Tim, kind of one thing we haven't talked about before, but it's events. Should I do an event as an asset manager in your city? Should you do an event at a hotel? Should you have a luncheon where you bring in your portfolio managers and you have a conversation? Should you do a cocktail party with a local RIA? All these are very viable and affordable ways to bring people together to create awareness and connection with your people, your PMs, and yourself. You can do a luncheon just for the PM covering a topic. If you get 10, 15, 20 RAs and any other due diligence analysts in your hometown, that's a home run. Similarly, you could partner with an RIA and they could invite all the allocators to come to your joint networking event, right? Everyone loves to network. And that RIA could be kind of your co-sponsor. So I just want to put it out there that these have been very successful for us. We do them all the time. We see a lot of firms do them. We partner with the Cerity partners here in Philadelphia, and that's been very successful, those networking events. So strongly encourage you to think outside the box, try to get face-to-face, create some buzz. And then also, if you do it consistently, once every 6 months, you kind of become the firm that everyone wants to attend your events.
That's a big point, is the consistency and the continuing to come back, right? You might do one event and you got 3 people at a lunch. You're like, I don't know if it was worth it. Try it again next quarter or the following 6 months, right? I have a friend that does a March Madness first day, opening day for the tournament down in Dallas. They're the buzz. I mean, people fly in because they hear about this event, right? It's just consistent. He's been doing it for 7 years now. So
be creative about getting face-to-face and creating different ways to make connections is the goal. So we're going to do conferences in a second because they're very effective. However, I'm going to give you what I believe is the biggest time-saving tool for any fundraiser, and that is the meeting concludes. Okay, you've done your face-to-face meeting, you've gotten there, you brought the story to life, you've made the connection. People ask me, when do you do follow-up? What's your follow-up cadence? And I say the follow-up must happen in the meeting. I'm going to tell you, I know it's emotionally difficult, but if you want to win and you want to save time, you have to ask the 2 tough questions. So if it's a long-only strategy, you finish the whole thing, and you're about to wrap up, say, hey, Tim, before we leave, could I just ask you a couple questions just real briefly? Sure, what's that? Just gone through a whole strategy. Do you see this strategy fitting within your asset allocation mix? If they say yes, then you can ask the next question. If they say no, then there's no opportunity right now, put them on the mailing list. If they say yes, and it's a long-only strategy, simply say, do you anticipate doing a search in the next 12 months in this asset class? If they say yes, then you go down a series of questions of what they need to better familiarize themselves with your strategy. And you naturally want to say, can we be in the search? If it's a private fund, you're simply going to say, that's great that we fit in your asset allocation mix. Do you think you would be able to make our 12/31/24 close? If they say no, you know what, I would need more time. Best I could do is 3/31. Then you have your answers. So then when you leave, you don't feel like you're getting ghosted and you're doing the old follow-up, but they're not getting back to me. They're asking questions in the email. It's a total disaster. I've been there. It's not a good use of time. Ask the 2 tough questions to close the meeting so you know exactly where you stand before you exit the building with that particular relationship. So with that, let's just kick into we have, I think, 321 active conferences within Dakota Marketplace. And we're just going to tell you about a few that I think would be useful to attend. The EX Americas, another great emerging manager. SEM Consortium, hosted by GSM Grosvenor. Raise Global Summit. Again, we've attended these, very good for emerging managers. And lastly, it's the UCITS and AIFMD for U.S. managers, which is the Alternative Investment Managers Association, hosted at AMA. And they do a lot for emerging managers, this association. I strongly recommend you go to their website and learn about them and potentially join. It's not inexpensive to join, but they do have a lot of information for emerging managers. And with that, Tim, any closing remarks?
No, all good.
Okay. The whole point of this conversation and the reason that we do this, we get so many requests for information on what should we be doing. And we really went through from the quarterly webinar to the city scheduling, to potentially doing events and luncheons and networking events, to asking the 2 tough questions. We're just trying to give you things that have really worked for us when applied consistently does end up, as long as you have a good investment strategy and it performs, it gets you meetings, it gets you closer to building a pipeline, and then all your follow-up, which leads to raising capital. So we've been doing this for 18 years, exactly this way. I promise you it does work, but it requires consistency. So thanks so much for joining us. Our next show, 24, will be October 8th at 1 p.m. Thanks so much for joining, and we'll see you October 8th. Have a great day. Hello, everyone. Just wanted to say thanks for watching. Hope you enjoyed the show. One thing that I think you do know is all of this information that we covered exists in Dakota Marketplace, our institutional investor database. Even this show that we just cut will end up in Dakota Marketplace so you can view it. And if you're not a member, we would love to show you the platform. Just simply go to our website and get a free trial of Dakota Marketplace.